stick your little face kind of.
Welcome to the Business Women Australia Podcast Show, the podcast that brings together industry leaders to discuss the latest trends, insights and strategies. So sit back and relax. Let's get inspired by the amazing women who are shaping the future of professional women in Australia. Don't forget to like and subscribe.
So welcome to the Business Women Australia Podcast Show, our first podcast for January. And I'm very happy to have Stacey Payrits, partner of LG Accounting Solutions, join me in our virtual studio. I'm Lyn Hawkins, founder and director of Business Women Australia, and we're live streaming today from Perth, from Bulu. And before we begin, I'd just like to acknowledge this beautiful country of the Noongar people, of the Whadjuk Nation, where we're streaming from today. I'm grateful to live and work on this land and pay respects to elders, past, present, and those fantastic leaders emerging. So we're going to be discussing essential tips to starting a business in 2025. And I've just been reading about the research that we're expecting record numbers of new businesses starting in Australia this year. So this is a really timely podcast. So we'll be exploring some of those critical steps to building a strong financial foundation for your business, including the pros and cons of setting up a company structure. So whether you're tuned in live on LinkedIn or YouTube or Facebook, or you're on catch up on your favorite streaming channel, thank you for being here, because I'm sure you'll get a lot of value from hearing Stacey's practical advice. As Brene Brown says, the courage to start a business isn't about knowing all the answers. It's about showing up. So well done you for showing up and tuning in to learn and build your knowledge. So let's get started. Perhaps, Stacey, we'll get you to just share with our listeners what inspired you to focus on supporting entrepreneurs through LG Accounting Solutions.
Well, first of all, thank you for having me, Lyn. I'm really excited to support small business and startups in 2025. So what inspired me to get started with startups and helping them is unfortunately seeing how it's gone wrong. So having no advice to begin with and running headlong into a business can lead to very costly mistakes when we try and fix things later. So not only are there tax consequences, there are capital gains tax consequences. And unfortunately for the lovely state of WA, there's often stamp duty consequences that people are not aware of at all. So no advice is almost as bad as bad advice, which some of our startups have also gotten. And trying to fix things retrospectively is just so much more expensive than getting it done in the first place and having the right setup, the right structure, with the right support from day one.
It's very rare for anyone to actually start from that perspective. You know, I've been, involved in business coaching for decades now, and so many people come to me with their business with a logo. They think that's the most important thing, or think about their name. Some of them have already got sort of the foundations of a website up and, starting to offer things and wondering about the best way to get paid, all those sorts of things. And I'm going, wow, where's your business plan and what's your structure and what's the purpose of being in this business? What do you want to do long-term with the business? So what are the first steps? I mean, someone's got an idea. Okay, they've seen an opportunity. They think, okay, there's a solution or a problem in the market that I want to close, that there's something that I want to be doing or getting into. What are the first steps that they should take before even deciding to get it up and running?
So there's two things you need to do. Is one, come and talk to an accountant, because you need, one, a budget. So a budget will then put your ideas into a practical format. So what are things going to cost? What's your revenue stream going to be? What is the model behind how you're going to get paid? So if you're offering a service and you go, okay, I'm offering a coaching service and I'm going to charge $240 for 2 hours of my time. Fantastic. But how many coaching services are you going to do a week? How often are you going to do that? What are the costs associated with it? So one of the things that we do when we start having these conversations and do what we call a business startup budget is they have this fantastic idea about what they're going to charge, how they're going to do it. But then as we start to drill down about how these things are actually going to cost, we actually realize, okay, your business is fantastic, but the income that you are projected to generate isn't going to cover your expenses. So we need to tweak the model, we need to change the model, or we need to increase what we're going to charge, or we need to make some adjustments for this to be a viable business. Too many people go headlong down to the, I'm going to make money, they forget about the expense side.
Absolutely.
So
and the cost of a
start.
business, the cost of starting a business is a lot more than people realise, isn't it? I mean, they may choose to do it, or it might be cheaper to buy someone else's business and rebrand it, if or even take on someone else's business if they just want to hand it over. Like there's so many other ways of establishing and saving money in that process, isn't there?
Correct. And so by starting up with that budget and assessing how am I going to make money and how I'm going to pay for things, but also forecasting when I'm going to make money. So you're not going to start generating revenue from day one. It's going to take time for people to recognize your brand, who you are, and attune to your services. So you need to factor in that you might have expenses for the first 3, maybe 6 months of your business before you're actually generating revenue to cover those expenses. So you need to talk about financing or cash flow and these sorts of topics first, because they're also going to determine what structure we recommend.
And that's a great segue into the next question I was going to ask you is, so many people will kind of set up as a sole trader and then grow from there. It's in their own name. What are your thoughts about a company structure, and what are the pros and cons of that compared to, say, the other forms of structures?
So you're right, most people do set up as a sole trader first, and sole traders can work. They kind of work for those small type of businesses, plumbers, personal trainers, electricians that are kind of just one-man bands. So working as a sole trader, there is nothing wrong with that. It does have its benefits, but it really only works is if you're kind of working as a contractor, almost as a pseudo-employee. Once you start to branch out and you're getting bigger, you're taking on more risks. So there's creditors involved, you've got staff, or you're starting to expand your business. This is when we need to look into moving into an actual structure that's a legal separate entity. We do this, number one, for asset protection reasons, because a business that can go wrong can literally cost your house. Whereas if we have you in a proper legal entity, such as a company or a trust with a corporate trustee, then your personal assets are your personal assets, business assets are the business assets. And unless you've signed a guarantee that says your house is on the line, we're actually protecting your personal assets if things do go wrong. And unfortunately, startups are inherently risky, and there is a high failure rate with startups. So we do need to make sure that assets are protected first. And then we can look at the tax advantages of the different structures. So a company structure is great from a tax point of view because we are limited to the corporate tax rate of 25%. But whether we recommend you do a company structure or a trust structure will depend on the likely profit of a business. So to begin with, if the profit of a business is when we distribute all the income out, so that's what happens with trusts, all the income is distributed out, taxes paid at an individual level. If there is a husband and a wife team where we can split the profit between two people, it's actually more beneficial for us to have a trust because we're paying a lower tax rate because we can split the income between two people. Companies are great because they're locked in at 25% tax rate. So there are tax considerations between trusts and companies. Where we would recommend a trust structure over a company structure is when businesses are basically going to take out everything they earn. So when you have a business and your profit is, for argument's sake, $180,000 a year, and that's how much you need to live on. So you're going to be taking out all the cash that is generated by that business. With companies, if you take out cash, there are only a couple of ways we can treat it. It can come out as wages to the directors. It can come out as a dividend to the directors, hopefully with some franking credits, or it can come out as what we call a Division 7A loan. All of those options have tax implications to them, as well as with loans, they actually need to be repaid and they need to have interest apportioned to them. So they can get quite complex. With trusts, if you take money out of a trust, it's just a loan. There's nothing we need to do with it. We don't need to declare it and do anything special with them. So in terms of managing the business structure when you're taking out cash or putting cash in and out, trusts are a lot easier to manage.
Yeah, it's and then of course there's partnerships. So many I find, particularly in the world of women in business, is that you'll get, a couple of colleagues getting together and starting up their own business as a partnership. What are the sorts of, benefits and things to watch with a partnership structure, do you think?
So personally, I don't like partnership structures. The reason for that being that when you are a partnership, both parties are liable for anything that happens in the business. So if you have a falling out with your partner and they do the wrong thing, well, guess what? You are still personally liable. So we try and stay away from partnerships. If we do have unrelated parties going into business together, then this is where we look at a company structure with the shareholders being their own separate legal entities, or we might do a unit trust, which is similar in terms of a company, but all the income is paid at the individual level rather than at the company level. And that can be more beneficial depending on their own financial circumstances outside of business operations. So if you have unrelated parties, we do companies with shareholding structures, or we do unit trusts with unit holding structures behind them.
Yeah, that's good advice. Really good advice. I've had the experience of all these different structures. I've had a sole trading. I've had a partnership. I've had a company with the trust being the Hawkins family trust being the shareholder, and others involved in their own entities, whether or not they've had an individual shareholding or their own family trust. So there's so many different ways, and it's, you really are advised, I think, to have a chat to Stacey or another accountant in your world that can explain to you what the pros and cons are that are particular to your situation. There are things that an accountant will pick up that you wouldn't have even thought of, and it often is to do with your whole personal and family situation and what else this impacts on, what the flow-on effects can be. So definitely really great insights there, Stacey. And I mean, you're seeing so many businesses coming in. What are the common financial mistakes that are being made, particularly by new business owners?
So one of the big mistakes we see with new business owners is when they start to have that little bit of success and suddenly there's money in the bank and they go, woohoo, I've got some cash, I can invest in my business. And they don't plan for when that bubble bursts. So our advice is have a little bit of a war chest as your business starts to grow and evolve. Be mindful of cash flow, especially over the Christmas break. What you don't realize is, well, you go on holiday, so does everybody else. So you don't get paid over the Christmas break. So you don't get paid over the Christmas break. You need to plan for that. And it can take a little while into January before that revenue stream starts rolling again. So have you got a plan for paying staff over that time or your expenses? You need to think long term. So that's where we see a lot of startups go wrong, is they start to kind of run before they can walk. And as they start to evolve, they get involved in every little bits of their business. And then before you know it, you're kind of working in the business, not on the business. So getting the right advice and building that right team around you is really important.
And that's not just startups. I mean, I'm a case in point. I've just had to tip some money into one of my entities to cover some expenses that popped up in the last month, and we've had to treat that as a loan, haven't we, Stacey? So that's the other thing. If you're putting personal money into your business, don't write it off. It just set it up so that it is a loan, so it can be paid back to you. If you're a director of the business and you're just assisting with it to ensure it's going to get over these lumpy bits.
Correct. And treatment of loans are really, really important, especially if you are working with unrelated parties. So you want to make sure that if you are tipping in more than maybe the other partner, so a business colleague that you're working with, they might be really good on the operations side of it. You might have a little bit more free cash. So as you're working through these lumps and bumps, you might be tipping in that little bit more cash. You need to make sure that that is protected so it does come back out to you first.
Absolutely. And so, these are really interesting subjects and they're often, the financial aspects are the bits that a lot of entrepreneurs and founders, business owners who are so busy and excited by the passion and the purpose of their business don't always look at and don't get stuck into. With regard to effective tax management, there's so many things that are overlooked, aren't there?
Absolutely. So one is, for us, record keeping. We can't deduct it if we don't know about it. So having a really good Xero or mild file is so important, and having those books up to date and done correctly. So we offer a bookkeeping service here at LG Accounting Solutions. You can do it yourself or hire your own bookkeeping service, but having those financial records accurate and timely mean that we can give you the best advice. The other thing that business owners tend to forget themselves is paying their own super contributions. Because you're not an employee anymore, you have to go and make those superannuation contributions and to be able to have them be tax deductible. So super contributions paid from a business are tax deductible, and something that business owners do need to think about.
Yeah, then that's another one that I know with my consulting practice, as particularly as it's sort of been winding down and I haven't been chasing more clients, I've been forgetting about that side of it. And it does make a big difference to your super. And this is typical of a lot of women who are in consulting or coaching practices, to not have that discipline. And I'm sure sole traders particularly as well, who are probably overlooking those contributions if they're on their own. Because you haven't got someone sort of pushing you to do those things, and you're sort of thinking, I'll get to that, and then another quarter goes by and you haven't contributed to your super.
Correct. And it's an amazing tax deduction, and you're paying yourself and getting a tax deduction rather than paying somebody else to get the tax deduction. So they're a good little trick to use.
Absolutely. So if we can move on to, building that financial foundation, what are the priorities to really set yourself up to be able to have that sustainable growth? So many of our founders are really looking to scale their businesses. I mean, how quickly? It seems to be that you can much more quickly generate those growth strategies if you've set yourself up properly.
Correct. So structure is paramount, being in the right trading entity, because when you want to go and get finance from a bank, being in the right structure for your business is really looked on favorably by the banks. Using a business broker to get finance is also really important. If you go and approach a bank directly, you can do that, but some of the nuances of your business tend to get lost in translation. Whereas if you're using a business broker, a business finance broker, they have a more direct conversation with the bank where they can tell the story of your business. So it's using the tools and the people around you to set up your financial goals. So having a line of credit is important in startups. Hopefully you don't use it, but you might need that bridging finance just to get you through as you're beginning to grow. And so you can take those opportunities to expand when they're there. So that's important to have in your back pocket. Having a budget is super important because you need to know when your bills are going to be paid and how much to make sure that the revenue you're generating is going to cover those expenses. And that way then you're not distracted by the next shiny object. So if you've got an opportunity that comes up and dazzles before your eyes and you're like, great, I really want to jump on that, you can at least have that thought of going, okay, if I do that, how is that going to affect my ability to pay my bills? Because solvency is number one, the most important. We've got to make sure that we are trading solvent, because the moment that you are trading insolvent, you personally become liable for the debts of the business, and that undoes all our great structure planning work to protect your assets. So it's those type of things that are financial literacy that is important, that's important to come and talk to an accountant in your world. The other thing to do is a course on how to read financial statements. It's all well and good to have these beautifully prepared profit and losses and balance sheets. If you don't know what the numbers mean, it's not going to do you a lot of good. So talk to your accountant about what the numbers actually mean and what they mean for you.
Yeah, we certainly enjoyed your oversight into the financial statements and how to read them, and we'll probably run another session on that too this year, actually, Stacey. I think it's a very popular one, particularly for women who are running their own businesses and those that are on boards as well. As soon as you get on a board, you want to be able to understand those financial statements and be able to then be able to put your strategic input knowing financially where the positions are going to be and how that might affect everything from that cash and growth perspective and profitability perspective. Yeah, I think that those financial literacy pieces are so important, and looking at then your own personal wealth. What are you learning about budgeting and cash management and saving for the future and growing and super, and then how do you actually look at your own financial plan then too? So many people will focus on their business and get to the point where it's great, but be ignoring their own financial wealth strategy. But talking about the line of credit's an interesting one, because it's something that I've always avoided, having that line of credit from a bank. I've always tended to go, well, probably for me, I've always got access to finance and cash, maybe even from redrawing in my mortgage, that's cheap, but it's from my own money, right? It's not always the best way of doing it when you've got a company.
Correct. So when you redraw from your own personal finances, it is a way to do it, and it is cheap in comparison to business finance, but it also means it's in your name. So if something goes wrong with the business, it's you that's personally liable. And again, so it's putting your own assets at risk. And at a startup phase, that might be the right thing to do. And at certain times of your business, that might suit you, and that might be the correct course of action. But looking at having finance within the business structure is also something that needs to be explored. There are many banks that support startups. There are lots of different opportunities to get lines of credit that are maybe just sitting there in your back pocket. So they're not something that you want to use, but give you the opportunity that if you need to jump on an opportunity, you can. Yeah. Rather than scrambling and having that stress at the last minute, trying to get finance put in place with the risk of you might lose something. Or worse, because you've got to get finance to be able to take an opportunity, you're locked into expensive finance that doesn't actually suit your needs. And so that's why working with a business broker.
Yeah, so business brokers are, mortgage brokers in your own life are fantastic. So of course business brokers do the same kind of thing from a business perspective. What about other forms of capital raising? And what are your top tips there? Attracting investors into your new business. I've seen so many women will try and perfect their business and not get anyone else to come in as investors until they've almost kind of like it's become their baby, and then it's really hard to get anyone else in, and they haven't had all this extra expertise and all the opportunities that investors can bring to help you scale. I mean, what are the top tips for that type of capital raising?
So for small businesses, bringing in investors is not an easy strategy, but it does come with a lot of, as you said, wealth of experience. So searching out for investors, one, it can leave you focusing to do what you do best. So if you bring in an investor that might have financial expertise, they can help with that side of the business, or bring in an investor that might have marketing expertise, and they can focus on that side of the business. The benefits of bringing in investors over paying these people is that you can bring them in and they bring in capital and investment, and then that way they're invested in the business. They want it to succeed because it's their money in it as well, instead of you having to pay for those services where you're just another client. Valued as I'm sure you are, but you sit somewhere on the list of priorities. People that have invested, that have skin in the game, are more likely to make that a priority. So investors certainly have their place, but it is very difficult to do that in the startup world.
It is. I mean, there's some different ways of generating, that kind of funding through capital raising. It can sometimes be more problematic depending on how quick the turnaround, I think, is that the investor wants their money back or their return back. How, whether or not they're patient, what we call a patient capital or patient investor. There are some sort of crowdfunding investment platforms that seem to be quite interesting, that are also helping build your market and engage your community. So that's sometimes an option. Yeah.
GoFundMe, all of those type of crowdsourcing, they are fantastic sources of credit if you are selling a product. Services, if you're doing a service, they're a bit harder to access.
Yeah, I've often wondered about that, and I know that there's sort of groups like, I don't know, Perth Angels and different groups around, and you have to get to the point where you can pitch it, and then you have to be able to show that return on investment and how quickly that's going to be scaling and growing. So that's very important that you get your accountant involved in helping you map out that, because it's all about the numbers. I've seen so many pitches where it's very light on in terms of market opportunity and growth and revenue projections. It's very light on, and they're generally the ones that fail in the pitch. It can't just be about the idea or the concept. So yeah, that's a whole nother topic in its own right, and perhaps one we could do with maybe even a joint conversation, Stacey, where we bring in some of the guys from the different worlds of investing to have a chat to us about what they're seeing and what kind of pitch proposals work really well. So
That would be great.
I think maybe a success story. It's always lovely, it's sort of been lots of heavy stuff, but it's actually fun to get into the numbers. But what is a success story where a business owner has overcome a significant financial challenge with the right planning that you'd like to share with us?
So I won't use specific names, but I will share a story of a lovely client that we had that came into our office with basically a thought bubble to he provides respite care for NDIS carers. So he takes the NDIS recipient out and they do amazing adventures. They go to the beach, they go camping, they go surfing, they do just these amazing things. And he was doing that as a sole trader, and he was like, well, I want to be able to help more people. I want to take this model that I do on my own, and I want to be able to help more children that are recipients of NDIS and really kind of give them the best opportunity to enjoy life and give their carers that little bit of respite for a weekend. And so he came in with basically nothing more than a thought bubble, and we went through the process. We started with the budget, the revenue streams, the model on how he would charge the clients, the expenses that would be involved in what he wanted to do, build out the packages that he would offer, and then based on that, got him into the right structure. And now it's been 6 months and he is off and rock and rolling. I think he's got about 6 providers that now work for him. He's got an internal finance person. He's got a consultant. They do monthly management meetings here in our boardroom. And his business is just going from strength to strength to strength. It is growing amazingly. But because he did the right thing, he came to us with a thought bubble. We set him up on the right path, gave him the right advice so that he knew what he didn't know and knew where he needed support, and he built that team around him, and it's now just an amazing business.
Oh, that's exciting, and such a great reminder, particularly for women. We're so DIY, and we squirrel away and try and do it all ourselves, and then when we think it's right or perfect, we might invite someone in because we don't want to upset. Well, I'm talking about me, actually. Let me talk about me. That's how I've been historically, sort of. And it's held me back, and I know it's held back a lot of my colleagues too with their business growth. It's just trying to get it right, trying to get it all right before you get someone else to invest in it. So it's about going out with an idea and getting the right advice and structuring it and financing it, and then getting the right people and the resources in place, and it will be the most successful and wonderful thing. It's not unlike a game of Monopoly, let's face it. So as we look ahead to 2025, Stacey, how do you see the economy? What are the trends that are impacting new businesses, and what is your advice for a potential founder, navigating what seems to be a very volatile time?
It's a hard market at the moment to have a startup. Obviously, the weakening Australian dollar is going to have a lot of impact on supply chains, especially because we do import a lot of goods. So that's going to make things more expensive. Also, we've got quite a big labour shortage. I mean, we've suffered it ourselves here at LG Accounting Solutions, trying to find good accountants. We have an amazing team, but building that team is hard work, trying to get new people in through the door. And so when you're building that business, if you need to bring on somebody, and especially in trades, so electricians, plumbers, and even businesses in marketing, they're finding it really, really hard to find good support. So that's a trend that is likely to continue. So you need to invest in technology or other opportunities to be able to support your business rather than having somebody work for you full time, because it's going to just be difficult in this labour market. The interest rates are still high, which is making capital and fundraising more expensive. There is hope of a rate cut sometime this year, hopefully, if the economists are to be believed. But the economy is so volatile that it's hard to predict when that is going to happen.
And being an election year too, election years always throw a lot of uncertainty. I find a lot of people just want to stay put, just keep things sort of wait and see. Lots of indecision and a lot of sort of ticking things over. So for a new business, if you're seeking investment or investors or looking to really shake up a market, this might be the right time to get those structures, those systems, those strategies in place, getting the finance, getting it all prepared and ready to go to hit the ground running following the election. And then when we've got a better idea on the economy, that's great advice. And I think perhaps one thing that I'd really love to wrap up on today is, I mean, you've given us so many different things, you know, around all the advice and tips of starting up a business for 2025. But when you think of one piece of advice that you wish every entrepreneur knew before they start their business, what would be the one biggest piece of advice you would give them?
You don't know what you don't know. Surround yourself with a team, whether that's an accountant, a business coach, a finance broker, a marketing expert, or just somebody to have a conversation with to help you mentor you on your journey. Don't reinvent the wheel. Don't do it alone. Learn from those around you. Build yourself a team.
I love it. It's such great advice. Don't do it on your own. Anyone who's listening to this, whether you're on streaming across at the moment live on LinkedIn or Facebook or YouTube, don't do it alone. Get the right advice around you, or whether or not you're listening to this on catch up, it's not too late. Even if you're not a startup, if you're at the stage where you're scaling and growing, I'm doing that with Business Women Australia, and I've finally got myself an advisory board. Stacey's now partnering with us as our preferred accounting provider. It's just extraordinary having this kind of support after trying to do it on my own for so long. It's just incredible. So thank you. We're getting lots of messages on our chat box. Thank you so much. Fabulous tips, Stacey. Well done. For those of you who might have tuned in halfway through, this will be on your favourite podcast channel. We're on Spotify, Business Women Australia Podcast Show. We're on YouTube. We're on our website as well. It'll be up there very soon. So feel free to listen to it again, because there was jam-packed full of advice. So thank you, Stacey, for coming along. We'll get you back again on the show. And for anyone else who might be listening and keen to become a member of Business Women Australia, please don't hesitate to reach out to me or to Stacey and find out what it's like to be a member. You can join online through our Business Women Australia website. We have a few different options for memberships and partnerships. If you've got any questions at all, don't hesitate to reach out to me, lyn@businesswomenaustralia.com.au. I would love to hear what your goals and dreams are for 2025. It's going to be a great year. It's got a great sound to it, right, Stacey?
Love 2025. It just rolls off the tongue.
It does. It rolls off the tongue. Lovely to see these comments, and thank you for all your positivity and support, ladies, and for showing up. As Brene Brown said, that's what it's all about. Don't we love Brene?
You have been listening to the Business Women Australia podcast show. We hope you've enjoyed today's episode and gained some valuable insights to empower you on your journey. Don't forget to comment, like, and subscribe to stay updated in our latest episodes. And if you're not already a member of Business Women Australia, what are you waiting for? Head to our website today and join so that you can connect with a thriving community of inspiring women across Australia. Thank you for tuning in, and we'll catch you in the next episode.